Bitcoin has been making significant gains in the beginning of 2023, trading above the $20,000 mark and increasing by more than 30% from its previous low. Despite being down nearly 70% from its all-time high, many experts believe that this latest rally is more than just a temporary rebound. This is due to the current technical setup and recent developments in the crypto market. After a year marked by extreme volatility and scandals in the crypto sector, Bitcoin has proven to be a resilient player, positioning itself to emerge stronger in the long run. The bullish case for Bitcoin remains strong, with new macroeconomic factors providing additional support. Overall, there seems to be a positive outlook on Bitcoin and anticipate continued upward momentum. There are several contributing factors to the recent resurgence of Bitcoin. One is the overall improvement in market sentiment across various asset classes, as evidenced by the strong rally in stocks in recent weeks. This shift in sentiment can be attributed to a change in perception of the economic data. For example, the December payrolls report and the recent update on inflation, which showed a decline in the Consumer Price Index, CPI, on a monthly basis, have helped alleviate concerns of the most dire scenarios. Additionally, the increasing institutional adoption and mainstream acceptance of Bitcoin as a store of value and hedge against inflation also have been drivers for the recent price rally. The current market setup is particularly favorable for segments that underperformed in 2022, such as speculative technology and cryptocurrency. Despite its many uses and potential applications, Bitcoin is still considered a high beta segment of technology due to its association with blockchain. The rebound in this area helps to explain some of its current strength. Additionally, the recent signs of easing inflationary pressures have led to the possibility of stabilizing interest rates, which in turn has driven a sharp decline in the value of the US dollar as a global currency. In this environment, Bitcoin as a digital asset and alternative to fiat currency is rallying by capturing similar high-level trends as other currencies and commodities such as gold. The cryptocurrency's decentralized nature and limited supply also make it a hedge against inflation and macroeconomic uncertainty, further driving the current price rally. The current rally in Bitcoin is not solely based on one factor or event, but rather a combination of various macro themes and market fundamentals. There is more to this rally than just Bitcoin benefiting from the overall rise in risk assets. Additionally, developments within the cryptocurrency sector are also contributing to the momentum. It's important to note that Bitcoin has been able to withstand the test of time, especially in the year 2022, where many skeptics predicted its demise. Despite the volatility and challenges the crypto market faced, Bitcoin has proven to be a resilient and durable asset, with a strong long-term potential. The current rally is further evidence of this and suggests that the cryptocurrency may be poised for further growth. One of the major events of last year was the sudden collapse of FTX, which was once considered one of the largest cryptocurrency exchanges in the world. At the time, some analysts argued that the bankruptcy of FTX could ultimately be positive for Bitcoin, as it could signal the end of the crypto sell-off in 2022 and a reset compared to the excessive optimism seen at the market's peak. This prediction appears to be gaining credibility as the current rally in Bitcoin suggests a potential recovery from the market downturn. The bankruptcy of FTX can be seen as a sign of market maturity, as weaker players are weeded out and stronger ones are able to survive and thrive. This can lead to a healthier and more sustainable market in the long term, which bodes well for the future of Bitcoin and the entire crypto industry. The collapse of FTX may have helped solidify Bitcoin's position as the gold standard of cryptocurrency, with the real casualties being smaller altcoins and tokens that played a significant role in the downfall of crypto market in 2022. This includes not only FTX but also other casualties like the Celsius network. New regulations being proposed by governments to control the crypto market could likely focus on centralized exchanges and private coin offerings, which are considered as a source of system vulnerabilities. In the past, many crypto-related startups could get away with just a flashy name, but this is no longer the case. Investors have become much more skeptical and are likely to be more cautious when considering these types of opportunities. This is a positive development for the crypto market as it will lead to a healthier and more sustainable market in the long run. This further reinforces the notion that Bitcoin, as the first and largest cryptocurrency, has proven to be secure and decentralized public protocol that is bigger than any individual or organization. It has been proven to be secure and has not been directly connected to the scandals that plagued the crypto market in 2022. It's worth noting that other cryptocurrencies such as Ethereum still have a place in the market, but the key takeaway is that the case for Bitcoin has been reinforced. As more and more people come to understand the importance of Bitcoin as a store of value and alternative asset, the demand for it as a form of money and payment will continue to grow. The scarcity value that is assigned to it by both small and large investors will also contribute to its continued demand. The long-term potential for Bitcoin has only grown stronger over the past year, and it seems well positioned for continued growth in the future. It's positive to see that in the 2 months since the FTX collapse, there hasn't been a wider financial contagion event within the crypto market. The relative stability in the price of Bitcoin and the current rally further reinforces the belief that the market has bottomed out and that the worst is over. Furthermore, reports suggesting that the FTX bankruptcy proceedings are progressing, with over $5 billion in assets recovered, is a positive step towards restoring confidence in the market. This demonstrates that the crypto market is capable of self-correcting and that the industry is moving towards maturity and stability. For the bullish call for Bitcoin to be sustained, the macroeconomic outlook and broader risk sentiment must remain positive. This aligns with the overall optimism for the future of the cryptocurrency. Technically speaking, it's encouraging to see Bitcoin back above $20,000 and breaking out of the long-running downward trendline that had been in place throughout 2022. This is a clear breakout, and the momentum is building as more traders and investors become involved. This trend suggests that more people are starting to see the value of Bitcoin as a long-term store of value and alternative asset. It's important to note that there are key areas of technical resistance ahead. To confirm the positive momentum and indicate a more significant shift in the market, it would be ideal to see Bitcoin trending above $25,000. This would signal a return to the levels seen in the first half of 2022. The next major target for Bitcoin would be $30,000, which is the initial forecast of some experts for the end of 2023. Achieving this level would confirm the bullish trend and signal that the market has fully recovered from the downturn of 2022. It's important to keep in mind that even with a bullish outlook, the market may not move in a straight line. Bitcoin and other cryptocurrencies are still considered speculative, which means that volatility is to be expected. On the downside, it is crucial for the bulls to maintain support at $19,000, as a break below that level would force a reassessment of the market. Additionally, a deterioration of the macroeconomic outlook, such as a sharp increase in the value of the dollar, would also have a negative impact on Bitcoin. Another important factor to consider is the ongoing discussions by governments around the world to regulate or even ban cryptocurrencies. Such headlines have the potential to undermine the bullish case for Bitcoin and should be closely monitored. Do you think Bitcoin will hit the $30,000 mark by the end of this year? What are your thoughts on government regulation of cryptocurrencies? Let us know in the comments section below. If you haven't already, make sure you subscribe to the channel to get the latest news and other education videos about Bitcoin.